Right. So what we're gonna do is that we will revise, okay, the whole concepts, and after revision we'll go with the sums. Okay. Shall we start? Right. Chalo. Let's move on. So what is the chapter that we have started, Nana? MBE. Tell me, is it important chapter or unimportant chapter? Obviously important, very important. Okay, it belongs to A category. Now coming on to all the topics in this particular chapter, I gave you the bird's eye view. What are the topics we have got? Quality management. Under that we have cost of quality, total quality management, as well as what, Nana? Business excellence model. Then we have theory of constraints, supply chain management, as well as gain sharing arrangement. Correct? Now priority wise, what's your first priority in this chapter? Quality management, all the areas of quality management, okay, which covers cost of quality, total quality management, as well as business excellence model. Then comes supply chain management, then comes theory of constraints, and finally gain sharing arrangement. After that, we have seen the intro. What is the intro part, Nana? During the past 2 decades, earlier, what was the market? It was dominated by sellers. Let's say roughly before 1990s. Okay, so seller dominating the market means everything is decided by the seller. For example, as you can see here, the price is determined by the seller, the response time is determined by the seller, the quality of the product is determined by the seller, as well as performance is dictated to the customer. So this is the performance that we're gonna give through our product. Say for example, if it's a bike or car, everything is dictated by seller. So seller domination purely. And seller was the price setter. That is also very important. Price setter means what? He can fix the selling price. Okay. But coming on to buyer's market, which took domination after what, Nana? Yeah, exactly. After 1990. Roughly, I'm just trying to give you an idea. That's all. Okay. So post 1990, what has happened? There was a tectonical shift in the way the business was going on. And that is what we call it as modern business environment, where like once upon a time, it was not the market that was dominated by the seller. It's purely a market which is dominated by the buyer. So buyer dominating in the sense, what does it mean? It means price is determined by the buyer, not directly, but what? Indirectly through the forces of demand and supply. So therefore, now the seller becomes price taker. He just need to accept the selling price that has been determined by the market. Unlike, earlier once upon a time where he used to be what? Price setter. And response time also will be determined by the buyer. What is the response time of the service that you are providing, or by within what time you will be delivering us the product. Similarly, quality also will be determined by the buyer. He will say, okay, this is the quality level that I'll accept, otherwise I'll reject. Similarly, performance also will be determined by the buyer. Now I told you examples for that, right? Royal Enfield Classic 350 we have seen, and we compared that with what, Nana? Java, as well as what? Honda CB350 and all that. Isn't it? And so what? All right. Now, the reasons for the above transition, we have seen all the reasons. First reason is what? Globalization, which led to what? Opening up of all economies, and as a result, multinational companies came into picture, correct? Because of multinational companies in every single country, what has happened? Competition has got increased, and that gave upper hand to whom? Buyers, okay? After that, we have competition, which I have discussed just now. Then, excess capacity is also one of the reasons, especially due to industrial revolution. What has happened? A lot of machines have come into picture, and as a result, what has happened? Their capacity to manufacture a lot of things has got increased, overriding their domestic demand. Domestic demand means what? Suppose a company is there in a particular country and they have a capacity which will satisfy the entire demand in that particular domestic country and beyond that. So what they started doing is that, okay, fine, they started exploring the other markets, which is obviously beyond their borders, okay? And after that, that is one of the reasons why we had emergence of multinational companies. You got the point? And they started getting into other countries, and they started setting up their plants, manufacturing plants, and started selling their products. Next, ease of travel is also one reason why we started getting imported cars and all that, isn't it? Right? Internet, of course, that's where the revolution has started, and customer has got access to all the details right now through the internet. So he became more intellectual in buying things, And finally, availability of raw materials is also one of the reasons. I gave you some examples, right? DB's group, I gave one example for diamonds and all that, and Coca-Cola example also I gave you, correct? Where they try to set up their plant where water is available primarily. Okay, anyways. So this is just the intro part of this particular chapter, okay? After that, what we have seen, Nana? Cost of quality. What is cost of quality? First of all, before we get to that, one thing we know that quality is not free. It takes some cost, correct? Otherwise, everybody will provide quality. Why quality is possible only to few people? Because you have to spend money to get quality, correct? Now, first of all, before we get to something called cost of quality, We need to understand what is quality. So I told you in a very simple way, quality means any product must be free from three things. What are those three things? Defect, deficiency, significant variations. Okay. I explain you what those significant variations and all that. Okay. After that, we try to understand how many types of cost of quality we have got. Okay. So first of all, what is a simpler understanding of quality? It is ability to meet what Nana customer expectations and provide value for money. If you are able to do that, it means from the customer's point of view, you are set to have quality. He feels that your product has what quality if you are able to meet his expectations and also provide what simultaneously value for money. I gave you an example for that. Scorpio N is doing right now. The same thing, isn't it? In fact, you can see the managing director interview yesterday. I don't know whether you guys are able to follow that or not. Exactly, this is the wording that he has used. Okay, he said that Indian customers at heart are always value conscious. Okay, they always look for value for money, no matter how rich they are. So by default, they look for what? Value for money. That's the exact dialogue of what. So obviously, they were also looking into these kind of aspects once they go for pricing. Okay. Anyways, now moving on to the next one. We try to understand what is cost of quality over here. Cost of quality has got two things. One is cost of creating good quality. Other one is cost of correcting bad quality. So cost of creating good quality can also be called as cost of good quality. Cost of correcting bad quality can also be called as cost of poor quality. There is one more name for cost of good quality, which we call it as conformance cost, where you conform with the quality standards which has already been set. We call it as conformance cost. Whatever the costs that are incurred in order to ensure that you conform with the quality standards that has been set, we call it as what, Nana? Conformance cost. And whatever the costs that are incurred in case you are not able to meet the quality standards, your product is not able to meet the quality standards, then to bring it back to the quality standards which we have planned, we call it as non-conformance cost. And of course, conformance cost can also be called as cost of meeting the quality. Non-conformance cost can also be called as cost of not meeting the quality. Once you are not able to meet the quality standards, then again I have to what? Work it out, bring it back to the quality standards. For that I have to incur some cost, which I call it as cost of poor quality. Right. After that, what we have seen, cost of quality, especially cost of good quality, can be further classified into two. What are they? Prevention cost and appraisal cost. And cost of poor quality can be further classified into two. What are they, Nana? Internal failure and external failure cost. Then we try to understand one by one. Okay. So what is prevention cost? Whatever the cost that you incur for preventing what, Nana? Poor quality of products. For example, if I train somebody, okay, what is the ultimate intention of training somebody? When you train them, exactly, they'll not, do what? Mistakes, isn't it? So they'll not do mistakes. They'll be able to manufacture the product in the best way possible, isn't it? Is it a good thing or a bad thing? Good thing. So you are trying to avoid something wrong from happening. What is something wrong from happening here? Bad quality. Okay. So training, even planning also comes under similar kind of a thing, isn't it? I gave you an example for that, isn't it? For example, for your exams, you plan, right? If you don't plan, what will happen? The probability of you failing in the exams will be really high, isn't it? If you plan, then the probability of you failing in the exams will be what? Relatively less. Same logic happens here also when you're manufacturing something, isn't it? Next, supplier evaluation. What do you mean by evaluating a supplier? To ensure that the supplier does not give you what? Low quality raw materials, or does not give you, what can I say? He will deliver the products on time. He will deliver the raw materials on time. New product review or evaluation. Whenever you are evaluating something, what is the logic behind evaluation? You try to ensure that things are correct. You understand the point? You try to ensure that things are correct. If you don't evaluate, then what will happen? Indirectly, you're trying to increase the probability of something wrong happening, correct? So that's the reason you try to evaluate. Training, already we have seen. Meetings also with the same intention, either to plan or to train people. Error proofing, already I gave you an example. What is error proofing? Quality management system such that your product will be free from errors. We have seen that Coke example, cool drink example, correct? Where the cool drinks are getting filled up. Before it gets sealed, you'll try to implement a laser system or something such that if there is any under quantity in that particular bottle, right, it will be filled up, and then after that it will be what, Nana? Sealed, such that once it is sealed, always it will be of good quantity, correct? Same thing we have seen with what is that? A printer example, where once you want to insert the cartridge, you need to insert the cartridge only in the right way, only then it gets locked, correct? So which means it has been designed in such a way that once the cartridge gets locked, it means that it is a good unit. So thereby you have created a system in such a way that there is no chance for error. That we call it as error proofing. Okay. Then of course, we have something called capability evaluation. So I told you already, the easiest way to remember this is, remember the words evaluation, okay, remember the words planning, and remember the words what, Nana? Training. So the moment you see these words, you got to understand that they come under what cost? Prevention cost. And of course, these prevention costs will be implemented before your product goes for actual manufacturing. Are you able to understand? This is really important. So you do all these things before your actual manufacturing starts. Okay. After that, coming on to something called appraisal cost. What did I say? Once your prevention costs are done, which means you have invested a lot of money into what? Prevention cost. Later, what will happen, Nana? You have a doubt whether whatever the money that you have invested in preventing something wrong from happening, has it been really able to prevent that or not? That is a doubt for me. Okay, so therefore what I'll do, I'll start checking. Isn't it checking or inspecting or whatever it is? So that we call it as what cost, Nana? Appraisal cost. Same logic we have seen in environmental management accounting, where Hansen and Mendoza's classification, where we have prevention environmental cost as well as what? Appraisal environmental cost. There also we have seen the same logic. In prevention environmental cost, you will buy some pollution control equipment, air cleaning equipment, water cleaning equipment, something like that. And then that is prevention cost, because you are trying to prevent something wrong from happening. In this case, it is pollution. Okay. And then you have a doubt whether is it really preventing or is it really doing what it is intended to do. Then I have to check it. Checking, testing, auditing, all these things. Okay, then I start really checking the water levels or really checking the pollution levels of what? Air. So that we call it as what cost? Appraisal cost. Correct? So that is what we have seen here. As you can see, verification, quality audits, checking, testing, field testing, as well as what, Nana? Supplier ratings. Here you have evaluated the supplier, that is prevention cost, and then you will check whether the evaluation is correct or not through ratings. That we call it as what, Nana? We call it as what? Appraisal cost. Exactly. Next. Internal failure cost means what? Despite investing your money in prevention cost, as well as what, Nana? Checking it through appraisal cost, still something wrong can happen. Correct? Yes or what? Everybody. So when something wrong can happen, that we call it as a failure. And that wrong can happen at two places. One is within your factory. The other one is what? Once your product has left your factory and it has reached the destination. Destination in the sense customer. Okay. So if the mistake is identified by you within the factory premises as a company, then we call it as internal failure. If that product reaches the customer and then customer identifies the problem and then tries to communicate with you, then we call it as external failure. So what are the examples for internal failure? Once you identify the failure within the company premises, we call it as waste, scrap, rectification, redesign, rework, failure analysis, delays, as well as what, Nana? Downtime. When I say downtime here, it is unplanned downtime, not planned downtime. Okay. Right. Another important thing is that the easiest way in a question to identify what internal failure cost is to look at the word re. Okay. Because whenever you check something, you test something, you inspect something for the first time, that comes under appraisal cost. But after checking also, if there is a failure, and then again you try to rectify the product, and again you try to recheck it whether the rectification has been done correctly or not, we call it as what, Nana? Internal failure. Are you able to understand? So the best example for that is rechecking, retesting, re-inspection. So whenever you see the word called re, then you have to understand that it comes under internal failure. Okay, then we have something called external failure, which we obviously know. The moment customer is involved, we know that it is a external failure, and which is the most dangerous cost out of these four: external failure, because it not only gives you a cost because you in the form of warranty claims or goods returned by the customer, whatever it is, but still it also affects your goodwill. So that goodwill will reduce your sales in the long run, which is really dangerous. Got the point? So you can see the examples over here: repair of goods returned, warranty, servicing, lost sales due to what? Customer dissatisfaction, complaints, etc. Okay. So after that, what we have seen? We have seen some important notes for solving case scenarios and case studies. What are those notes? We know that cost of good quality is inversely proportional to cost of poor quality. So the more you invest in prevention and appraisal cost, the lesser will be what? Internal failure and external failure. So therefore, if a company wants to achieve zero defect level, it has to invest a lot of money into what? Prevention and appraisal cost, not just at one time, not in one shot, but regularly over a period of time. So that is what we call it as continuous improvement program. So you keep on investing your money in prevention and appraisal cost such that your internal failure and external failure at some point of time may become what, Nana? Zero. Okay, after looking at this, we have seen something called optimal cost of quality. So what is optimal cost of quality? This is cost of good quality graph. So which means here you're investing a lot of money in prevention and appraisal. At the same time, if you have invested a lot of money in cost of good quality, cost of poor quality will be at its minimum or almost zero. Similarly, if you have not at all invested any of your money in cost of good quality, then cost of poor quality will be really high. Correct? So what this optimal cost of quality tries to tell you is that this is wrong, this is also wrong. Why? Because in both the cases, your total cost of quality is what, Nana? Really high. Correct? Your total cost of quality is really high. So he says that you try to find a balance between them such that you have an agreeable level of defects percentage so that your total cost will be at its minimum. So as you can see, where these two lines intersect, this is the area at where your optimal cost of quality exists, which means your total cost of quality will be at its minimum. Got the point? That is a concept. Although I told you I don't agree with this concept. Why? Because this concept only considers what, Nana? Cost of quality. But we generally prefer, it's my personal opinion, we prefer what? This one. Which one? This one, where your prevention and appraisal cost is really high. Yes, we agree that total cost of quality will be what? Here. It's very, very high when compared to what? This level. Okay, by this much. But still, you have a lot of other perks. What are the other perks? One is almost you are defect free. When you're almost defect free, your customer will be really satisfied. He knows that once he buys a product, it will be absolutely sure shot. Correct? That increases your brand value. As a result, that increases mouth publicity. That increases sales in the long run. So that additional contribution from additional sales has not been considered here. Second is you can also try to sell at a higher price because of the brand value, because of the higher quality. You understand the point? That extra sales which you are enjoying, that is also not considered here. As a result, I personally feel that which is the best one? Which is the best one? Yeah, this one over here. Got the point, Nana? When your cost of good quality is at its maximum. Okay. Sometimes it can be inefficient also. Anyway, at that time we'll see, look at the individual situations and then accordingly we'll take the call. Okay. Right. Okay, let's look at here. So point at which total quality cost is minimum is known as what, Nana? Optimal cost of quality. This implies that striving for zero defects through continuous improvement is not at all good from what point of view? Economic point of view, which means from numbers point of view. And the argument is that there should be some acceptable level of defects, which I have told you. So lower external failure and internal failure cost will result in what, Nana? Higher customer satisfaction, which will also result in more sales. We have discussed this. It is also possible that a project may not be attractive from financial perspective due to what, Nana? High cost of good quality, which is nothing but prevention and appraisal, but it can be attractive from non-financial perspective in the form of higher customer satisfaction. Always remember, today's good non-financial perspectives or tomorrow's good financial perspectives. Okay, today if customer is satisfied, which is a non-financial perspective, tomorrow your finance will be very healthy because the customer will indirectly increase your sales. Correct? Right. Okay, now next question is, discuss any measures to reduce what, Nana? Non-conformance cost. Very simple. If you want to reduce the non-conformance cost, which is internal failure and external failure, what you will do? Increase the investment in prevention and appraisal. Correct? That we know already because both of them are inversely proportional to each other. Apart from that, we have certain other things as well. You can invest in TQM, total quality management. You can invest in Six Sigma because the job of Six Sigma is to identify the root cause of defects and reduce the defects. Correct? We can also invest in total productive maintenance because the entire intention of total productive maintenance is to ensure that your machines are working at optimal efficiency level. Correct? Automatically the quality of your finished goods will be good. And of course we have Kaizen and target costing. Okay, chalo. After that we took a small example where we try to understand what is the calculation of what, Nana? Cost of quality. So I gave you a selling price and variable cost, okay, and contribution over here. And we took the example of customer demand as how much, Nana? 4,000 units and rejections by the customer as 20%. So when the rejections by the customer is 20%, to satisfy a demand of 4,000, you need to deliver how many units, Nana? 5,000 units, which is 4,000 divided by 80% because 20% will be rejected. So once you manufacture 5,000, ultimately customer will be accepting 4,000. Okay, after that we have seen certain scenarios. We went with scenario 1 where there are certain presumptions that I have taken. What is the first presumption? Rejected goods are not replaced. Loss of market share due to loss of goodwill is how much, Nana? 1,000 units. And return goods by the customer will not be exactly repaid and they don't have any scrap value. In this case, in this scenario, we try to understand what is cost of quality, right? So to calculate cost of quality, the first thing you guys need to understand that there will be a contribution loss. From where? From the loss of market share due to what, Nana? Loss of goodwill. Which is how many units? 1,000 units. So from each unit, what is the contribution that we have already calculated? 30. So 1000 into 30, how much I'll be losing? 30,000. Apart from that, even though the sales is 5000, I'm actually manufacturing how much, Nana? Sorry, even though the sales is 4000, I'm actually manufacturing 5000, which means 1000 units are produced, rejected, and they got wasted according to our presumption. Okay. So therefore, once 1000 units are wasted, I've already spent how much of money on manufacturing those 1000 units? 70. Not only manufacturing, you're also delivering them to the customer. After that, only customer is rejecting. So therefore, you'll incur the delivery cost as well. So ultimately, I'll be losing how much? 70 on per unit basis. For 1000 units, I'll be losing 70,000. So total external failure cost for me will be 30,000 in the form of loss of sales because of loss of goodwill, which we call it as opportunity cost. Plus, we have 1000 units which got wasted, where we have manufactured and delivered to the customer, but customer has got rejected, and therefore we have lost how much on that? 70, and that gives us 70,000 loss. So the total loss is how much? 1 lakh, which we call it as what cost, Nana? External failure cost. After that, we have seen something called scenario 2, where in scenario 2 we took some different presumptions. So the first one was goods will be what, Nana? Replaced, unlike scenario 1 where it will not be replaced. Replaced components can't be repaired, but I'll be replacing, that's all. I'll not be repairing. Scrap value still here is 0, which means you just need to throw it away. And loss of market share due to the loss of goodwill is still the same, which is how many units? 1000 units. And also here, because you'll be replacing, which means you have to deliver the product again to the customer, and that additional delivery cost will be how much, Nana? How much? 10 rupees. Those are all the presumptions. So now again in this scenario, we try to calculate cost of quality. How to calculate cost of quality? First, again you're losing contribution because of loss of goodwill, correct? Yes. So how many units are you losing? 1000 units at a price of how much, Nana? 30, which means I'll be losing how much? 30,000. And then you also need to replace 1000 units, correct? What 1000 units? The customer will be rejecting 1000 units, and then you have to again replace those 1000 units to the customer, correct? So which means again additionally you will be incurring 10 rupees, correct? So therefore earlier it was just 70 rupees what you were losing, but now you have to again send back a new unit, correct? Where you will be incurring additional 10 rupees. So therefore you will be losing how much? 80 rupees. So therefore 1000 into 80, how much you will be losing? 80,000. Anyway, contribution loss or opportunity cost is already there, which is 30,000 plus 80,000. How much will be your external failure cost? 1,10,000. Right. After that, what we have seen? Chalo na, shall move on. Now, what is the next one we have got? Solution 1. So here, what is that we are trying to see? How to solve the above problem of defective units reaching the customer and affecting the goodwill negatively. Okay, because since in the earlier two scenarios, what is that we are facing? We know that the defective units are reaching the customer. So once defective units are reaching the customer, what is happening? Customer is feeling pretty bad because he is rejecting, and as a result, the goodwill is getting bad. I mean, the goodwill is going down, and as a result, ultimately, the bad word of mouth is spreading, and as a result, I'm losing what? 1000 units of market sales, correct? Now, what I'm trying to do eventually is that I'm trying to rectify that case. What case? Customer should not feel bad about my product. I have to protect my goodwill. So to protect my goodwill, I'm going with two solutions. The first solution is I am trying to completely eliminate the defective units. How can I eliminate defective units? For that, first I need to find out root cause of the defect. So I have done my research, and eventually I found out that the root cause of my defect is what? Defective raw materials from the supplier. Got the point? So once I've identified that raw material defects are the reason for my finished goods defects, okay, what I've done, I have kept a inspection where the moment I buy the raw materials from the supplier, immediately it will be inspected before it goes for production. As a result, this will result in two things. What are the two things? You will save variable manufacturing cost of rejected units. Why? Because first of all, you will not manufacture any rejected units, isn't it? Because your defective units are completely eliminated. As a result, 1000 units of 70 rupees will be what, Nana? Saved. So therefore 70,000 will be saved. Apart from that, customer will not be getting any defective units. As a result, customer satisfaction will be high, your goodwill will increase. Therefore, you will be able to sell 1000 units more. So therefore, on every unit, you will be earning a contribution of 30. So therefore, I'll be getting an additional contribution of 30,000. Totally, my benefit will be a cost saving of 70 plus additional contribution of 30. Total, it's going to be how much? 1 lakh. But to actually implement this solution, to inspect the raw material, I have invested how much on here? 95,000. So therefore my net savings will be 5,000. So this is one solution where we have eliminated what? Defective units once for all. But in the second solution, what we are trying to do is that we are not trying to eliminate the defective units. Rather, we are trying to identify the defective units before they reach the customer. Got the point? So what I'll do is that I'll try to have a inspection process at the end phase of the production. Okay, end phase of the production means once your finished goods are manufactured, before it leaves the factory premises, there I'll do the inspection such that all the defective units will be what, Nana? Identified, and they will not leave the factory premises, thereby avoiding the possibility of reaching the customers. So as a result, all the defective units here, we are not avoiding creation of defective units. What we are trying to avoid is only the reach of the defective units into the customer's hand. That's all. Okay, right. So for that, how much is the cost we are incurring to inspect the finished goods before it leaves the factory? 25,000. And this will result in three things. What are those three things? First, anyway, your goodwill will increase because ultimately the defective units are not reaching the customer. Therefore, they'll be happy. And as a result, good word of mouth will spread. And therefore, my sales will increase by 1,000. If sales increases by 1,000, I'll be able to get more contribution, which is 30, thereby 30,000, which we know. Next. But the problem here is, unlike in solution 1, I did not avoid manufacturing of what, Nana? Good units. Sorry. I did not avoid manufacturing of bad units or defective units. Therefore, even though if my sales increases by 1,000 units, actually I have to manufacture how much? 1,250 in my factory because there will be 20% defects. Okay. So 1,250 I'll manufacture inside my factory. And at the end of the factory gate itself, 250 units will be identified and it will be stopped. And exactly 1,000 units will reach the customer. Got the point? So therefore, even though I have increased sales of 1,000 units, actually I have to manufacture how many for that 1,000 sales? 1,250 units. You got the point? In this 1,250 units, 1,000 are produced and sold and 250 units are produced and they will be what? Wasted. But they will be identified within the factory. But you need to remember that we won't be incurring delivering cost on these 250 units because they are identified within the factory. So therefore, cost of 250 wasted units will be what, Nana? Only 50. Thereby, I reduce the delivery cost and eventually I will be losing how much? 12,500. After that, delivery cost also will be saved on the other defective units because earlier, when the sales demand is 4,000, actually I need to manufacture and send how many? 5,000. In that, customer will reject what? 1,000. So therefore, ultimately I am incurring delivery cost on the entire 5,000. But now what's happening? Exactly. Now what's happening? Yeah. So he is rejecting what, Nana? Sorry. Now what's happening is that we are only identifying what? 1,000 units within the factory premises. As a result, ultimately we are delivering only 4,000 units. You understand the point? Therefore, we'll be saving delivery cost on those 1,000 units, which is the difference between 5,000 and 4,000. And that savings will be how much? 20,000. So the total savings will be how much for us? Here we have additional sales, additional contribution from additional sales, which is 30,000. And also we have the delivery cost saving, which is how much, Rana? 20,000. So the total gross savings will be how much? 50,000. And the cost for this will be initially I've incurred 25,000 for inspection of finished goods before they leave the factory gate. And after that, here again I'm incurring cost of 250 wasted units for the additional sales, and that will be 12,500. So the total cost will be how much? 37,500. There is a net savings of 12,500. So if you take the summary of the above, here in solution 2 there is a net savings of 12,500. In solution 1 there is a net savings of 5,000. So you might be feeling from financial perspective that solution 2 is better. But always in the long run, which solution is better, Nana? Solution 1 is better because first of all, you are not manufacturing any defective units, which means you are doing optimum utilization of resources. So tomorrow after 5 years, maybe the raw material may become what? Scarce. In that case, obviously solution 1 will be better. So therefore, always in the long run, which is better? Solution 1 will be better. That is one thing. Got the point? That is what we have seen here. Okay. Yes. And apart from that, there is one more solution. Already we have seen two solutions right now. One solution was you just try to keep an inspection department at the beginning of your factory, where the moment you get raw materials from the supplier, immediately it will be what? Inspected, and thereby all the defective raw materials will be rejected, and only good unit raw materials will go for what? Production. Thereby all the finished goods will be good. That way you have avoided defective units. The second solution was you did not avoid defective units, you just started getting all the raw material, you did not inspect them, straight away it went into production and it created defective finished goods. But that defective finished goods were identified by way of inspection process of finished good before it leaves the factory gate. Exactly. And therefore ultimately good units will be reaching the customer. That was second solution. There is a third solution also, which we have already implemented as per JIT. So as per JIT, what we generally do is that because we can't have the luxury of defective units, because as per JET, because it is just in time, after getting the sales only, I'll be what? Producing eventually. So I don't have the luxury of time, right? And moreover, I don't maintain stock as well, isn't it? So therefore, what I do in JET is that I go to the supplier, I tell him that I have identified that the reason for my defective finished goods is your defective raw material. So therefore, please don't try to send me defective raw material. You try to do the inspection process yourself. We will also support you for that. And we were doing that. We were sending our engineers to the supplier's factory, isn't it? To improve his quality. And you improve your quality and finally send me only good units. I'll pay you that extra bit of premium for doing all this work rather than the normal price that I pay for your raw material. You understand the point? As a result, eventually what will happen? He will give me directly what? Good units only. Thereby, there's no need of inspection and all those things. I'll get the good units and thereby I'll manufacture only good units. Everything is solved. Got the point? So this is the last solution, okay, which indirectly we have seen in JIT. Okay, right. So after this, we have seen something called total quality management. We have seen the definition of total quality management. Definition is very easy. It is a management philosophy which seeks to integrate what, Nana? All organization functions like what? Marketing, finance, design, engineering, production and customer service. What is the intention of doing all these things like integrating all your functions is to focus on meeting the customer needs. Not only meeting customer needs, but also what? Satisfying the organization objectives. It can be profit maximization or wealth maximization, whatever it is. So that is the definition. Pretty easy to remember. After that, we try to understand the concept of TQM in detail. So what is this TQM? I told you that the key word here is all. So what do you mean by all? Your objective of TQM is to meet what, Nana? Customer expectations by removing what, Nana? All the waste and also simultaneously improving efficiency, not just in one process, not just in one department, not just in one function, but in what? Everything. So the key word here is all. That is why it is called total quality management and not quality management. Okay. This requires ensuring that all the things are done right the first time itself. The same thing we have seen in Deming's 14 points also, correct? So according to JIT also, they feel that inspection is a non-value added activity. As a result, they say, why are you depending on the inspection? Now the biggest question is, why am I depending on inspection? Because I have a doubt that I'll manufacture defective units. So try to remove that doubt. How to remove that doubt? Ensure that you get everything right the first time itself. Thereby there is no chance of defective units. Then there is no need of inspection. Are you able to get me? Right? So next. The next question is how to get things right the first time itself. Now this can be achieved by continuous improvement of all the functions of the organization like what, Nana? Design, engineering, production, marketing, finance, through the most important wording here. What is that? Joint efforts of all. Joint efforts of all means who are they? Top level management, middle level staff, lower level workforce, as well as the third party who is supplier. Okay. Because everybody put together, what will happen? I gave you a perfect example for that. We have seen a very big example where we try to understand, okay, how all these guys put together will help you out to get a best product, correct? Because supplier will give one input, right? Design team will give one input, production manager will give one input, correct? Marketing guy will give one input, saying that this is what the design that customer expects or accepts. You understand the point? You guys remember the example, right? Now we don't have time because we are revising, but what I'm trying to tell you is that we have seen a very good example where how a team together will give you a lot of advantage, right? Anyways, so after that, what did we see? We have seen certain important notes for TQM where I told you that there is no single theory of TQM. It is just a philosophy that assumes that quality is an outcome of all the activities taking place in the organization and everybody in the organization has to participate. Do you guys remember the same wording we have seen somewhere where we have seen that everybody needs to participate to make this successful? Kaizen costing, very good. That was one of the important sentence. We have been repeatedly seeing that when we were studying Kaizen costing, correct? In target costing also we have seen, but in target costing mostly the designer team has to be involved completely, not the whole of the organization, correct? Yes, what? But when it comes to Kaizen costing, that was not the case. Everybody has to involve at all the levels. Only then Kaizen costing will give you the desired results. Same logic happens here as well, even in TQM. Okay, another important thing is quality is not measured from manufacturer's perspective. Quality is always measured from customer's perspective. This is very, very, very important. What customer feels that this is the quality, that is the quality that we need to accept as a manufacturer and try to give the same to the customer. You understand the point? Everybody, very, very important. Keep this in mind. Expected quality standards is based on internal priorities or industry standards. It depends upon where the company stands in the industry. Okay, if the company is already benchmark in the industry with respect to quality standards, then it will go with internal priorities. If the company is not benchmark in the industry, if it is a very small company or a beginner company, then it will look at industry standards that we have seen. Then TQM is to be viewed as investment rather than cost. Correct? This we have already seen somewhere, same sentence, where business process reengineering, where we have seen that BPR should be seen as a investment in the short term and benefit in the long term. Same goes with TQM as well. Correct? After that, we have seen a question where how to use TQM to gain what a competitive advantage. So we have 4 points over here. First one is what? Fine tuning of the existing process to improve what? Quality, to ensure that the quality is happening. And also you have to train your employees as that they will ensure that quality will be there in each and every aspect of the function of the business that you are doing. And developing commitment towards quality. That is what we call quality culture. Just like how we eat food, how we try to breathe, how we try to bathe every day, correct? Just like that, quality also should become normal. It should become normal for everybody in your company. Only then TQM will be implemented successfully. And finally, ensuring that customer satisfaction is there. When there will be customer satisfaction, automatically once you provide quality product at the desired price, automatically customer satisfaction will be there, right? Yes or no? Right. After that, what did we see? Suppose you want to implement TQM in a bank, what will you do? Very simple. You provide training to the staff. What kind of training? Not just technical training where you'll be teaching him how to open the bank account, how to look at the accounts and stuff like that, all the technical part, but also how to treat your customer, how to talk to him, how to explain him. Suppose sometimes you are not able to solve his problem then and there itself, then how to convince him that this is not going to happen today. You understand that? That's customer care. And also, next thing that you would like to do is try to give more staff to solve customer complaints faster and also reduce the length of the queue in case customer is suffering from what? Long queues in your bank. That way you can implement TQM. See, these are all one of the things how we'll implement TQM, correct? And also increase working hours of the bank for better customer experience. Suppose customer office timings ends at 5 o'clock. You also close your bank at 5 o'clock. It's not going to work. Try to open it till what? 7 o'clock so that customer can come and take the services from your bank. And finally, provide single point of contact and also what nana? Online banking services. This way you can try to implement TQM in a bank. Suppose if your bank is falling behind when compared to the competition, right? After that, we have seen something called what nana? 6 Cs of TQM. So what are 6 Cs of TQM? We have seen commitment, culture, control, customer focus, cooperation, as well as continuous improvement. In this, lot of things we have already seen. Already we know that to implement TQM, we need to do something called continuous improvement. Already we know that for implementing TQM, we need cooperation of everybody. Already we know that to implement TQM, in the definition itself, the entire focus will be on the customer. Already we know that to implement TQM, we need quality culture, correct? Yes sir, what? And also there is something called control, which I've already explained you, right? This is one of the negative points of TQM also. There will be too much of documentation for everything that you do, isn't it? Yes sir, what? All right. So probably a little bit of new point here is that we can say commitment, where quality improvement should become a normal part of everybody's job. That I already told you. It should become a normal habit, correct? Yes sir, what? Right. Culture means, I told you, it is a change in attitude completely. Okay. That will happen once you train your employees. Next, control means what? I told you. Control is really important. I gave you a perfect example of standard costing where just because you set the standards, everybody is not gonna follow it and achieve it. You have to what? See the actuals. You need to calculate the variance. After calculating the variance, you need to get the report. You need to document it, and you have to take a counter measure on it and punish or reward somebody who is responsible for something wrong, isn't it? This whole process we call it as control, correct? And that's why control is also important. In TQM, if you just set the rules and then leave it, it's not going to happen. You have to eventually what? Control it. And then customer focus. Yes, we know. Always will be focusing on the customer, not just the outside customer, but also the inside customer. Internal customer will be the other divisions, correct? And of course, cooperation means total employee involvement, where if you have multidisciplinary teams from different departments and functions, everybody has to put joint efforts and give solutions. And finally, we have something called continuous improvement. So it is not a program where you have a starting date and ending date. TQM is not like that. TQM is like a process which goes on what nana? Continuously. Right. After that, we have seen one important thing. What is that? Deming's contribution to TQM. We know that Deming is known as father of quality control. And what Deming was trying to say is that You guys are obviously wrong, because always you blame the quality issues to what? On the laborers, and that's absolutely wrong, because only 15% of the quality problems is due to the inefficiency of the labor, whereas 85% of the quality problems are due to what, Nana? Your inefficient processes, systems, and your poor management. Okay, right. Then we have seen very important 14 points of Deming. I told you, you need not remember this 14 points where he'll be asking you a question in the examination where please write Deming's 14 points. Will he ask you something like that in the exam? No. But what will happen is that when we are trying to answer certain case scenarios and case studies, we have to make use of these points to answer those case scenarios as well as case studies. So that is important. Okay, right. So what are the Deming's 14 points, Nana? First one, create constancy of purpose towards improvement. So what is the meaning of it? Replace short-term reaction with what, Nana? Long-term planning. I gave you MCL example there. You remember that, right? Next, adopt the new philosophy. What philosophy I have to adopt? Deming's philosophy only, where always don't throw the blame on the laborers. The actual blame, you have to rectify your own internal systems, internal process, as well as the management. And C's dependence on inspection, that we have seen already. So try to get it right the first time itself. We have seen the example of what is that? Printer. We have seen the example of that, oil bottle and all that. Next, move towards single supplier for any one item. Why? Because if you buy the same raw material, even though the raw material is same from different suppliers, there will be significant variations in your finished good, because each supplier will give you a different, slightly different quality of raw material. So to ensure that quality is there, for one finished good, entire input should be bought from one supplier. Got the point? So that the uniformity will be there. Next, improve constantly and forever. That is nothing but continuous improvement, which we know, correct? Institute training on the job. Yes, you have to give training to your employees such that they will not create what? Defective units, correct? Next, institute leadership. I told you the difference between leadership and bossism, where bossism goes with what? Targets and pressure and all that. Leadership doesn't go with that. It goes with quality of work, okay? Next, drive out fear. What fear? It prevents workers from acting in organization best interest. Means, suppose a worker at the lowest level who is operating a machine has got a phenomenal idea to improve the operation of the machine or whatever it is, and then you have to let him come forward and share his thoughts, correct? And we have seen in JIT also, one of the performance measurements in JIT is number of ideas generated. So therefore, the more freedom that you give to the lower level workers who are operating on the machines, the better ideas you'll get, and that will be in the interest of the company as a whole. So to make that happen, you need to drive out the fear. It's not there right now, but once upon a time it was there. So we were talking about 1970s, 1960s, 1950s. You got the point? Next, break down the barriers between departments. So you see, supply division is there. You should look at the receiving division as what? Another customer. Don't try to see him like normally what will happen before this, if supply division is selling certain goods to the outside environment, which means to the real retail customers, and also he's selling the same good to what? Receiving division. He never used to give same importance to both the people. He will treat the external customers with real maturity, real what is that? He'll give a lot of importance on the timing and stuff like that. But when it comes to the internal customer, he used to take him in a what do you say? Take it for granted, something like that. That kind of an attitude used to be there. But Deming said that don't show this differentiation. You treat him the same way you treat what? External customer. Next, eliminate slogans. What is eliminating slogans? Earlier, they used to put a lot of posters and slogans where because they felt that all the mistakes were on the laborers, correct? And as a result, the laborers used to get demotivated, and that was actually counterproductive. Okay, it was not helping the employees to increase their productivity. So therefore, now you eliminate all these things, okay, because you know that 85% problem in quality is due to what? Your own processes weakness, as well as what? System weakness, as well as poor management. So therefore, now you eliminate all these slogans. They are no more necessary. And after that, we have seen something called production targets. What is that? Eliminate management by objectives. Objectives means target. You never run a management with targets, because you try to push the targets on your employees. What they will do? They will try to rush up their work. So therefore, they'll try to compromise on quality work. For example, they'll skip inspections, and then they'll try to deliver the product faster to the customer. Now this will definitely affect the quality, so don't do that. Next, remove barriers to the pride of workmanship. So if any worker has really performed well, and that should be known to the top level management, recognize that, and then try to give him a bonus or incentive or something like that. Make him an employee of the week or month or whatever it is. That will also encourage all the other employees. Overall, your efficiency of your entire employees will increase. And of course, last 2 points are very simple. What are they? Exactly. Institute education and self-improvement, and transformation is what, Nana? Everybody's job, that we know, because everybody has to involve when it comes to TQM. Correct? Then we have seen criticisms of TQM. What are they, Nana? Too much documentation, which we know. And of course, I gave you this example as well. What is that? Too much of focus is on quality assurance and not on quality improvement. I gave you the perfect example of Toyota, both Innova as well as Fortuner. Correct? So yes, once you buy an Innova, whatever they are offering, it's gonna be a qualitative stuff. There is no doubt in that, isn't it? It's gonna work for sure. But you're not trying to improve what you're offering. You understand the point? Yes or what? Whatever Toyota is offering, yes, it perfects. It will run for 5 years, 7 years, 10 years, fine, down the line. But when compared to the competition, you are offering less features, less luxury, less quality of materials. You understand what I'm trying to say? So there is quality assurance. Yes, whatever you are assuring is gonna work. In that, there is no deceiving part. But your competitors are offering better. What about that? You try to do that as well. So that is one of the negative point of what, Nana? TQM. And of course, I've just give you one small point over here, because some of you guys are getting confused between TQM and Six Sigma. So I told you that both of them indirectly they improve the quality, but the approach is different. Six Sigma tries to improve the quality by what? Reducing the defects, by identifying the root cause of the defects. But TQM is not like that. It tries to improve the quality by focusing on process improvement, process efficiency, the way work is done. You understand the point? So totally both these guys are actually different in their approach, although the target is the same. Got it? All right. Okay. After that, we have moved on to the next one. What is the next one? We have got business excellence model. Right. Right, guys. So now we have something called business excellence model. I told you that it is a dry topic already. Correct? Right. And in the recent study material, the content has got changed. So let's try to understand. What is this? A very simple understanding is it is nothing but self-assessment for a company. So any organization would like to self-assess, themselves. So where do they stand with respect to their industry? How are they competing with respect to their competition? Do they have edge over their competition, or are they actually weak with respect to what? Competition. If that's the case, then how they have to improve themselves so that they'll be able to what? Compete eventually. So it's just like self-diagnosis, okay? Self-assessment of an organization. Got the point? Anyways. So now, why do we need business excellence model? Well, to survive in a complicated and competitive modern business environment, a company should achieve excellence in what, Nana? All aspects of their business. Not one, not two, every aspect. So excellence in all aspects of business is nothing but business excellence. Why have to excel? Because you want to satisfy the needs of those who are impacted by your business operations. In simple words, stakeholders. Okay. You got to satisfy all your stakeholders. Okay. What kind of stakeholders? Your customer is a stakeholder, your employee is a stakeholder, your supplier is a stakeholder, okay? The banks or financial institutions who has given you loan is a stakeholder, correct? Government who collects taxes from you is a stakeholder. The society around you is a stakeholder if they are getting affected by you. You understand the point? So your responsibility is to ensure that you give everything to these guys which you are intended to give. For example, you have to make payment on time to the supplier. You have to give good quality product to the customer with good customer service. You have to give good compensation to your employees and give them good growth opportunities, correct? Yes or what? Right? And you have to pay your bank loans on time, and you have to pay taxes to the government on time, isn't it? That's the thing. So that is what we call to satisfy the needs of those who are impacted by your business operations. In other words, all stakeholders. I gave you two stakeholders example over here. One is employees, where you have to give them good compensation, growth, learning, experience. And for society, you have to give them ethical work. You have to ensure that you do not employ any child labor, and also betterment of your surroundings, indirectly raising the standard of living. Will it happen? Yes, it will happen. Whenever you see when there are a lot of companies, the standard of living around those areas gets what? Improved, because you have a lot of money, right? Because a lot of people will be working and you've got a lot of money. So automatically you'll buy a lot of things. Naturally, what will happen? Standard of living will increase, right? After that, we have seen the summary of BEM. What is summary of business excellence model? Excellence in what, Nana? All aspects, and satisfying the needs of all stakeholders. And there are a lot of business excellence model in the entire world. We have EFQM, European Foundation for Quality Management. We have got Singapore Business Excellence Framework. We have Australian. We have what? Japanese. But what we have in our syllabus and what is relevant for exam is what, Nana? EFQM model. Next, we try to understand what is EFQM. We have a diagram, but before we get to the diagram, first we need to understand what it is. So what is EFQM model, Ray? First of all, it has got three modules that provide a logical and systematic method of self-assessing the organization. Because we know that business excellence model is all about self-assessment of an organization, correct? How to self-assess? We have three modules. What are those three modules? Module number one is direction. Module number two is execution. Module number three is results. Sir, what is direction, sir? Very simple. Why does an organization exist? Got the point? Explain the purpose of the organization and the strategy that it uses to operate its organization. Got the point? Yes or what? For example, now imagine for a moment that you are the organization. Okay, why do you exist right now? As of now, let's say that your target is to pass what? CA. Let's put it that way for ease of understanding. Okay, then that is nothing but the module one, direction. So what's your direction? In the direction of passing your CA, correct? Yes. For example, you take RICA. Why do they exist? They have to create what? The qualified charter accountants, and they have to manage them, isn't it? And yes or what? Right? You got the point. That's the purpose why an organization called ICA exists, right? To create these professionals, to manage these professionals, isn't it? Everybody, right? Next, module 2 is execution. So what do you mean by execution? How does it deliver on its purpose and strategy? For example, we took our example, right? So your target is to pass the CA. That is your direction, right? Next, how does it deliver on its purpose and strategy? How are you going to achieve the passing CA, which is your direction, correct? Probably you have to what? Put some effort, you have to write some exams, you have to get minimum 50 marks and stuff like that. Yes or what? You have to prepare for it, you have to appear for the exam, all these things. That will come under how. Next, results. What has the organization actually achieved and what it wishes to achieve in future? Now you will actually write the exam and we'll see your results. Okay, did you really achieve what you're intended to do? You got the point? In case if you pass, then you as an organization, you have achieved what you wanted to achieve. There is a matter, that's all. So it's a simple three modules. What are those three modules? Why do you exist? Okay. How are you going to? So why do you exist means there is a purpose. And the next question is how are you going to achieve that purpose? And the third question is did you really achieve that purpose? Which is nothing but results. Correct? Everybody. It's a pretty simple thing. Okay. Just try to remember. That's what we have in the diagram. Direction, results, as well as what, Nana? Execution. Got the point? Right. Okay, after that we have seen that there is a key term over here which I have underlined. What is that key term? Sustainable. What is that? The logic of this particular model is to connect the purpose and strategy. Purpose means why a company exists. Strategy means what is it trying to do to achieve its existence. You understand the point? Which means, say for example, a company is there. Let's say we talk about Royal Enfield, for example, Eicher Motors. So what is the purpose of that particular company? Yeah, I want to be a leader when it comes to what? 350cc segment vehicles. Let's put it that way. Got the point? So that will be your direction. Why do your organization exist and what you want to achieve, correct? How are you going to achieve it? Yeah, I try to provide quality 350cc vehicles of varied models like Classic, like Meteor, which is a touring model. Like you have got multiple models, isn't it? And did you really achieve it? Yes, the results show that he is the market leader even today, isn't it? Yes. So it's a simple thought process. So the rationale of this business excellence model is to connect the purpose and strategy. Also find out how this connection between purpose and strategy can help the organization achieve and deliver what, Nana? Sustainable value and outstanding results for its stakeholders. When I say stakeholders, it includes your customer, your employees, your suppliers, your people who are trying to do business with you, everybody. It includes everybody, right? And the most important word here is sustainable value. What do you mean by sustainable value? Not just today, not just tomorrow, for an infinite amount of time, let's say 20, 30, 40, 50 years, you have to keep on delivering the same. It's not just this year, it's not just next year, right? Then we have seen something called radar. So what is this radar? It acts as a diagnostic tool for this particular EFQM model, because through EFQM model you are trying to self-assess yourself, correct? As an organization. That is nothing but we call it as business excellence model. And for that radar will help. Now how radar will help? First of all, what is radar? Radar is an acronym for what? R stands for results, A stands for approach, D stands for deploy, A stands for assess, and again R stands for refine. So let's try to understand them. So results means determine the results of the organization it is aiming to achieve as a part of its strategy. In our example, I just asked you to presume that you are an organization so that you'll have an ease of understanding. Then what's your results then? Determine the results that the organization is aiming to achieve. What are you aiming to achieve? Pass CA in November 2022 or May 2023, for example. Okay. Next, approach means what? The approach the organization will take to deliver the result now as well as in future. For example, based on our assumption, in our example, you are the organization, and what is the approach that you will take to pass the CA exams? You will take coaching, you will study for 10 hours per day, and you can get the right materials. You got the point? Yes. Next, deploy. Deploy means what? You have to execute this approach properly. Now, in approach, you know what to do, and in deploy, you have to execute it. In reality, you have to really do that. For example, in reality, you have to study for 10 hours. In reality, you have to take coaching, or in reality, you need to prepare from the right materials. And then finally, we have something called assess and refine. Assess and refine means what? You have to check whether what you have approached here and what you have executed, did they really work? Assessment is nothing but checking out whether it has really worked or not. How can you check whether it has really worked or not? Your exam should be, you should be passing with good marks, correct? In case if it works, then whatever you have done so far is fine. In case if it didn't work, then you have to what? Refine. Refine means what? Better what you have done. You understand the point? Then you have to change your strategy. Again, start from this one, and again you try to achieve. Got it? Anyways. Then after that, finally, we have seen that EFQM model along with the radar, which we have seen just now, has got the following uses. So what are the uses that we have got? First use is it helps the company to build a holistic view of its current operation. Now, what is holistic view? Complete view. Okay, A to Z view. Okay, how are we operating? What are our strengths? What are our weakness? Okay, what is our market share? What are our competition? In relation to them, where do we stand? Where does our industry stand as a whole? Every single picture you will have a clarity. With the help of what? Business excellence model. And that business excellence model is what? EFQM. Next, it helps organization to drive transformation through well thought of course of actions that can change its current operations to achieve what? Excellence in operations. This steers the organization to achieve and sustain long-term vision through continuous improvement. What do you mean by this? This so-called EFQM model with radar framework will help you drive what? Transformation through well thought of course of action. For example, in our example, we were talking about passing your CA exams, correct? Yes, or what? Once you do self-assessment to pass your CA exams, that so-called self-assessment will help you what? To understand where you are right now, and it will drive the transformation. Transformation means what? The change. What needs to happen? Say, for example, you're just studying for 4 hours or 5 hours a day. The transformation will happen. Maybe you'll start studying for more number of hours, or you'll start studying effectively, or you'll start studying the right books, or if you feel that you can't self-study, then you'll start taking coaching, or if you're already taking coaching, if you feel that self-study is enough, you'll go for self-study. Whatever it is, ultimately it's a transformation. It's a change. Got the point? Hello? Yes. All right. It also helps organizations sense and prepare a response for market disruption. Very, very, very important. This build agility, or in other words, flexibility and resilience in what? Business operation. I think I gave you a fantastic example for that. What example I gave you? With regard to building the response for market disruption. Something wrong happens in the market, how will you respond? The greater flexibility you will have, the response will be very strong, and you will not be affected by that. Correct? I gave you a perfect example of what? Saffola. You remember that? Did I give you the Saffola example or not? What is the challenge that they have faced? How did they really overcome that? Correct? Yes, it was a very interesting case study. Anyways, after that, the EFQM award is a coveted award, of course. If you follow EFQM, there is a good thing, because EFQM is very famous, and as a result, we will also start giving awards. And if you follow our EFQM model, then we will be giving you the best implementation of EFQM, whatever it is. And then because of that, your goodwill also will what? Increase. That point they are trying to say. Because they say that, yeah, EFQM is what? Globally pretty famous, and therefore they can bring what? Not only that, another important thing, just like your accounting standards, what they are trying to do is that if every company starts implementing EFQM to self-assess themselves, then what will happen? We'll have the data of all the companies, isn't it? So that will bring uniformity in criteria while assessing the organization relative position in the marketplace. I'll have the data of business excellence model of one organization in EFQM, another organization also in EFQM. What can I do? I can compare them. You understand the point? And then I can see what is the total position of the industry. I'll be able to understand clearly what company, where it stands. Got the point? Hello? Yes. All right. Fantastic. So with this, we're done with what? We're done with what, Ray? Business excellence model. Okay. Now we're done. Shall we move on? Bol Ray Mukus. All right. Now next we have something called theory of constraints. Okay. Now before we get to theory of constraints, I told you that we need to understand three things. What are those three things, Nana? What is a constraint? What is a limiting factor? And what is a bottleneck? Constraint means, I told you that anything that makes achieving your objective difficult than it would otherwise be is a constraint. Means Suppose you want to reach a destination on your bike and reaching the destination is your objective, then in the way, a pothole, a speed breaker, a traffic signal, a narrow lane, everything will make reaching your destination difficult than it would otherwise be, correct? So all those potholes, speed breakers, that does, everything, we call it as constraint. So constraint is a very big term, okay? What is a limiting factor? We already know, we have seen it in decision making chapter. Scarce resources are nothing but limiting factor. Raw metal can be scarce, labor hours can be scarce, machine hours can be scarce, correct? If their availability is less, automatically they'll become limiting factor. So then we have seen something called bottleneck. So what is a bottleneck? Anything that slows down your manufacturing activity is a bottleneck. So logically speaking, limiting factor and bottleneck, they are actually same, okay? So if raw metal availability is less, automatically it will slow down your manufacturing activity. It's as simple as that. If machine hours availability is less, automatically it will slow down your manufacturing activity, correct? So basically both of them are same, right? After that, we have seen something called, there are two people called Goldratt and Cox, and they had a new approach for production, and that approach is referred as what, Nana? OPT. What is OPT? Optimized production technology. So what is this optimized production technology? This OPT says that you can expand your profits by increasing what? Throughput. Now what is throughput? Throughput is nothing but sales minus direct material cost. Now that throughput can also be called as a throughput contribution. For that I already told you the logic. What is that? We presume that the time scale is what? Very small. So when the time scale is very small, almost every cost will behave as a fixed cost except one cost. What is that one cost? Direct material. And therefore the only variable cost in such a kind of a scenario based on the presumption is direct material cost. So logically speaking, this formula is actually what, Nana? Contribution is equal to sales minus variable cost. And that variable cost is what? Direct material, because in this scenario only direct material is the variable cost, and the contribution will be referred as throughput contribution. So in other words, it is nothing but sales minus variable cost, okay? Right. Then we try to understand what is this OPT approach. What is OPT? Optimized production technology. So OPT basically means that they say that first of all you identify all your resources in your factory, then divide them into two categories. One is bottleneck, the other one is non-bottleneck. And then non-bottleneck resources, do not utilize them to their 100% of their capacity, and bottleneck resources, you utilize them to the 100% of the capacity. That is what OPT says. Okay, now we try to understand the logic behind that. Why are they telling us to utilize bottleneck resources to 100%, and why are they telling us not to utilize the non-bottleneck resources to what, Nana? 100%. For that we try to take an example. We took 3 machines, and machine 1 capacity per hour is how much? 5000. Machine 2 is 3000. Machine 3 is 6000. Now out of these 3 machines, we know that machine 2 is what, Nana? Bottleneck, correct? Right? Because it is slow. So we have 3 machines over here, and machine 2 is the bottleneck. Why machine 2 is the bottleneck? Because its capacity is what? 3000 units per hour. So according to the OPT, what is that he's trying to say? Utilize this machine 2 to what? 100% of its capacity, because it is bottleneck, and do not utilize machine 1 and machine 3 to its what, Nana? 100% of its capacity. What is the logic? The logic is, suppose if you utilize machine 1 to 100% of its capacity, then you will be able to manufacture how many units, Nana? 5000 in 1 hour. And this guy will be able to manufacture only 3000, or he'll be able to take only 3000 in that 1 hour, correct? And as a result, indirectly what happens, there will be a 2000 units of WIP stock getting piled up between machine 1 as well as machine 2, that is in 1 hour. Then imagine what's the situation in 2 hours, 3 hours, 4 hours, 5 hours, 6 hours. There's a lot of WIP inventory that will get piled up. And we have already seen in JET that if WIP inventory piles up, there are 2 problems majorly. One is a lot of money that gets blocked, so you'll have a heavy opportunity cost, or working capital requirement will increase. And if any defects are manufactured by machine 1, unless the machine 2 operator works upon the pile of WIP stock over here, that defect will not be communicated to the machine 1 operator. Till that time, machine 1 operator will keep on what? Manufacturing the defects, which is not good for the company, correct? So to avoid this WIP stock before the bottleneck machine, which is M2, we say that utilize bottleneck machine to the extent of 100%, which is 3000 units per hour. And also The non-bottleneck machines, which is M1 and M2, I mean M1 as well as M3, do not utilize them to their 100% levels. Not utilizing to the levels of 100% means what? Utilize them to the level of what? Bottleneck, which means now bottlenecks is manufacturing 3000, which means M1 also should manufacture 3000, M3 also should manufacture 3000, so that WIP will be avoided. Correct? That's what OPT says. Right. After that, what did we see? We have seen operational measures of TOC. What is that operational measures? We just try to understand three important terms in theory of constraints. What are those three important terms, Nana? Throughput, contribution, then what? Investment, then we have something called operating expenses. Correct? So throughput contribution means what? Obviously it is an inflow, so I want it to get increased. Correct? Investment means it is the money that is getting blocked, so always I want it to keep at its minimum. And operating expenses is nothing but outflow, so I want it to get reduced or minimized. Correct? And of course, here I told you the most important thing, even direct labor will be considered as what, Nana? Fixed cost, because there is an assumption of small time capsule. So the only variable cost is what, Nana? Direct material cost. Although sometimes in questions, he will also tell you that direct labor is also variable. If it is specifically told in the question that direct labor is variable, what do you have to do? Take direct labor as variable cost only. So ultimately it's a question that you have to follow. But 90 to 95% of the cases, only direct material will be what? Variable. Got the point? Anyways, after that, what did we see? We have seen Goldratt's 5-step method for improving what, Nana? Performance. Correct? For bottleneck machine. What are the 5-step process? First, you have to identify the constraint. In our example, it is M2. Correct? And exploit the constraint. So utilize M2 to 100% of its capacity, which is 3000 units per hour in our example. Then subordinate and synchronize to the constraint, which means M1 and M3, you need to subordinate them to what? M2 and synchronize. Synchronize means what? M2 is manufacturing 3000, therefore M1 and M3 also should manufacture 3000. That is what we call it as synchronization. After that, elevate the performance of the constraint. Elevation means what? Improve the performance of the bottleneck. Right now it is operating at 3000, which is M2. Correct? You try to elevate it such that it will manufacture something more than 3000. How can you ensure that it will manufacture something more than 3000? How? I told you a lot of examples yesterday. Suppose there are 4 workers who are working upon M2 machine right now. Increase it to what? 6 workers. If you feel that because of 4 workers they are not working to the fullest capacity of M2. Suppose right now you are working 5 days in a week, you increase that to 7 days. Suppose you are working 8 hours per day, you increase that to 12 hours. Suppose there is any spare part that you can change such that the efficiency of the M2 will increase, then you do that as well. Ultimately, you do a lot of things. If nothing is working, you can change the machine as well. That's the last resort. Ultimately, the intention is to elevate the performance of the constraint such that what will happen once you elevate the performance of the constraint, which is a bottleneck, it ceases to become bottleneck. Correct? But once it ceases to become bottleneck, somebody else will become bottleneck, and again you will repeat the same process. Then you take that somebody else, he will become bottleneck, then again you will exploit, which means utilize to 100%, again you will subordinate and synchronize all others to the bottleneck, and again you will elevate the performance of the bottleneck, and again somebody else will become bottleneck, and then this keep on what? Going. So it is a non-stop cycle. Okay. So that is what I've explained here as well. Okay. Chala. Right, Nana. After that, what we have seen? We have seen something called throughput accounting ratio. So what is throughput accounting ratio? Inflow per limiting factor divided by outflow per limiting factor. That's what I've told you in the simplest terms. Inflow is nothing but throughput contribution divided by limiting factor is nothing but bottleneck minute. Correct? It can be bottleneck hour or it can be bottleneck minute. Divided by outflow is nothing but factory cost per limiting factor is nothing but per bottleneck minute. Correct? So ultimately this will give us an idea of how much is inflow with respect to what, Nana? Outflow. Just like your profitability index in your CA inter. Correct? So generally we'll calculate this TA ratio for so many products like A, B, C. Suppose for A the TA ratio is 1.2, for B it is 0.9, for C it is 1.3. What does it mean? It means that B should not be continued to be manufactured because 0.9 means it is less than 1. Less than 1 means what? Your inflow is less than outflow. Therefore, you should not be manufacturing B. What about A and C in my example? It's greater than 1, so no problem. And C is the most profitable one. You understand the point? That way, TA ratio will help you to identify which product is actually giving you what? Good profit. Chalo. Okay, how to improve TA? This we know. If you want to increase this TA ratio, what are the two choices? Increase the numerator or what? Reduce the denominator. Pretty simple. Okay, after that, what did we see? A very important topic. What is that, Nana? Supply chain management. Right. So what is the supply chain management, buddies? It is nothing but management of what? Flow of products, not only products, services, not only services, data, which is information all the way from origin of the product, which means in our example, we took the tires example, correct? Where the origin of the product will be from the forest, where the raw material you'll be getting, right? From there to the consumption of the final product, where it is consumed by the end user, correct? Who is using a bike or a car or whatever it is, right? And that we call it as what, Nana? Supply chain management. To put it very simple, ensuring that the entire chain of supply is intact. It's not broken. You understand the point? Because in that entire supply chain, you can see some 10 companies or 20 companies or 30 companies will be there, right? From the original origin and the end user, correct? If any of these companies are suffering, then the whole supply chain gets affected, correct? Yes or what? Right now, that is what is happening. Na? In the entire supply chain, there is one area in China, which is Shanghai. I don't know whether it is Shanghai or, I don't know. I think it is Shenzhen, I think so. Whatever it is, I'm not sure with respect to the name. In that area, because of Corona, what has happened? The entire manufacturing operations has got stopped, which has not been started even today, if I'm not wrong. Because of that, the whole supply chain got affected. You understand the point? And that's the reason why we have so much waiting periods with respect to our cars today. You understand the point? So from this only, you have to understand that managing the supply chain is that important. That's why we have a separate topic on that, which we call it as management of supply chain, which is nothing but supply chain management. Okay, what is the objective? What is the target of this supply chain management? You have to correlate your production and distribution of the goods in case you are manufacturing something with the demand of the product, such that it should match with the customer's demand, so that customers get what they want, when they want, where they want, and the price they want. But right now what's happening is that the companies are not able to match their production with the demand of the product, especially in case of cars, correct? Because the demand is very high, especially post corona. Many people are willing to buy what? Private vehicles, exactly. And because of the supply chain shortage, especially the chips, because one organization in your entire supply chain got affected, these guys are not able to meet the demand. So they are not able to provide customers what they want, especially when they want, and also at the price they want. Now you can see price has got increased like anything, isn't it? Everybody, all right? Okay. Then we have seen something called process of supply chain management. This is very important for us, especially for solving what? Case studies and case scenarios. So the entire process of supply chain management has got how many, Nana? 4 things. What are those 4 things? Plan, develop is nothing but procure, make, as well as what, Nana? Deliver. It's very easy, right? First you plan, then you procure the raw materials, then you manufacture, then you deliver. That's all. It's very simple to remember, isn't it? Everybody. All right. So what is plan? Instead of ad hoc production, ad hoc means blind kind of production. Blind means without giving any importance to what the actual demand is. You just keep on producing on your own without any thought process, just based on gut feeling. Okay. So instead of doing like that, don't do that. You develop a proper production plan after understanding the customer requirements. You try to do the research, see how many units they want. Accordingly, you try to make your production. Then once you have done with your planning, now you have to procure the raw materials in order to manufacture, correct? Where you will procure raw materials? From your suppliers. What sort of raw materials? Good raw materials with good quality and on time. It should not be delayed, correct? After you get the raw materials, you will manufacture the finished goods, which is nothing but making. So how to manufacture the finished goods? Manufacture it in such a way that the quality is equal to the requirement of the customer. Got the point? This will automatically capture the ever-changing customer demand. For example, I gave you an example. Earlier, sedans were in demand in India. Now what? SUVs are in demand. So accordingly, every brand is launching an SUV only when they try to launch their brand. For example, Kia Seltos, MG Hector, correct? We have seen all those examples in detail or what? All right. And finally, deliver. Deliver manufacturing product to customer with what, Nana? Excellent logistics. And I told you logistics are really important because you have to deliver on time. I gave you an example of Toyota Glanza versus Toyota Baleno. You remember that? Did I give you that example? Yes, exactly. Chalo. Okay. After that, we have seen some important notes. What is that? Always logistics will play a crucial role. Right from procuring raw materials, you need logistics. Movement of raw materials in the plan also, you need that. Delivery of the final product to whom? Customers. You need good logistics. For example, Amazon and all these guys, they're taking, I gave you the real life example of what? E-cart. You remember that? All right. Next, warehousing also plays a crucial role. I gave you the example of Samsung mobile phone. In case your screen gets damaged, you try to go and try to give it to the service center. And if there is no local warehouse, if there is a centralized warehouse, I explain you how it will happen. Correct? You guys remember that or what? All right. Next, seamless flow of information is also critical. Right from capturing customer requirement to production plan to intimating supplier for supplying what, Nana? Raw material. For that, you need integrated ERP. Here also, I gave you example of McDonald's. Do you guys remember or what? Seamless flow of information. I also gave you example of Amazon. Correct? Also, SCM is the backbone of e-commerce industry, which requires fulfillment of orders from any place and any time. That we know. Why? Because SCM research is a core reason why e-commerce industry has got boomed right now, isn't it? Because in e-commerce, basically what happens, you got to connect a lot of people, that too on a real-time basis, isn't it? Yes or what? I gave you that example as well. And because there was a lot of study already went through into SCM, and that SCM worked as a backbone for your e-commerce boom. Got it? So which means what you're trying to say is that if there is no SCM, there will be no e-commerce? Absolutely yes. That's what I've told you already, isn't it? Yes. All right. Okay, finally, later we have seen types of supply chain. How many types of supply chain we have? 2 types. What are they, Nana? Exactly. One is push model. The other one is pull model. Push model means what? First of all, we will decide a product. I gave you Colgate Plaques example. You remember that? And then we will try to push the product into the market by doing what? Advertisement. And customer will not ask for anything. Correct? But in pull model, what happens? Customer will demand the product and then he will pull the dealer. Dealer will pull the company through, let's say, I gave an example, right? The last department in the company, let's say production department 3. Production department 3 will pull P2. P2 will pull P1. P1 will pull the supplier. You remember that? That's why it is called as what model? Pull model. I explained you with the help of this example, correct? So this guy pulls this guy, 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 and this guy pulls what? Vendor. So it is pull model. That's why, because you are pulling, correct? Hello, here what is happening? He pushes here, this guy pushes here, this guy pushes here, this guy pushes here, and finally you push it onto the customer through advertising. Got the point? Or we can also call it as marketing, correct? Hello, all right. So after that we have seen SCM for service industry. What are the problems that we're gonna face in service industry? Basically, services are more customized, unlike your products, correct? So therefore, meeting customer requirements which are uncertain, and also they will be what? Ever changing. That's the biggest challenge you will face once you try to implement your supply chain management in a service sector industry. The best example that we have seen yesterday is what? Tourism industry. I explained you that. You remember that? So customer requirement should be fulfilled considering capability of the organization, which means we should not give over promises more than what we can capable of doing. Yes. In other words, there has to be a balance between meeting customer requirements and also maintaining effective supply chain management. What is effective supply chain management? Customer and company both get required level of service in what? In a cost effective manner. Got it? All right. So example I gave you, if you are running a tourism industry, okay, tourism company, accept only those packages where customer and tourism company both can get what? Required level of service from their suppliers. From their suppliers means what? I ask my customer to go to some other place, Nana. Like for example, let's say it is Sri Lanka, suppose in Colombo. In Colombo, I'll have my own partner, my supplier as a tourism industry guy. I'll have a taxi partner, I'll have a hotel partner, isn't it? Yes or what? So what I have to do when the customer comes to me, look at the wording, accept only those packages with the customer. I'll accept only those packages from the customer. Means what? I will only give some promises to the customer such that where customer and tourism company, customer and me, I'm the tourism company, both can get required level of service from their supplier. Means what? I need to get money from him, right? Plus the customer needs to get required level of service, whether it can be food or it can be transport or it can be sightseeing places, whatever it is. You understand the point? Yes, everybody. All right. After that, we have seen that there are 2 things in supply chain management. One is upstream, the other one is downstream. So what is upstream, Nana? So I am the company. Above me, we call it as up. Who is above me? Supplier. So all managing of all the transactions with the supplier, I call it as upstream supply chain management. Who is below me? Customer, right? So all management of all the transactions with the customer, we call it as downstream supply chain management. Now upstream is very simple. I told you it is not that important as well. And there are only two things when it comes to upstream. What are those two things, Nana? One is relationship with supplier. The other one is use of information technology. What do you mean by using information technology? You try to source the supplier online, which we call it as e-sourcing. And you try to what? Purchase the raw materials from the supplier online. You try to make payment online, which is nothing but we call it as e-sourcing, e-purchasing and e-payment, which is nothing but use of IT. Another thing and most important thing is maintaining the relationship with the supplier. That also comes under upstream supply chain management. What do you mean by maintaining relationship? For example, what are your strategies when you try to finalize a supplier? First of all, do you need supplier? Then try to take a make or buy decision. If I manufacture on my own, what's going to be my cost? If I try to buy from the supplier, what will be my cost? Accordingly, take a good decision. Then try to identify number of suppliers. And don't always depend on one single supplier. You always depend on multiple suppliers, but have relationship with one core supplier. Then cost, quality and speed. So your supplier should be selected based on three important criteria. What are they? Cost, so that he gives you at an affordable price, plus the quality of the raw material should be good, plus he should be able to deliver faster as per the promise. Got the point? Everybody, right? After that, what do we have? Source. Source means what? The supplier should be nearby, the location should be nearby, and he should be available all the time in case of emergency as well. Correct? Right. After that, what did we see, Nana? We have seen something called downstream supply chain management. In that, I told you only two things are important. What are those two things? Customer relationship management and relationship marketing. Brand strategy and use of IT are pretty simple. Okay, first we started with relationship marketing, where we have something called what, Nana? 6 market model. Okay. What is this 6 market model? See, as per relationship marketing, what is your objective? Your objective is to keep your existing customer, but also to attract what, Nana? New customer. Exactly. Isn't it? Right. So to do that, one organization should have proper customer care, appropriate prices, and also what, Nana? Helpful staff. To achieve this, organization should focus on 6 market domains. So we have seen that 6 market domains, right? What is the first market? Supplier market, where supplier itself will act as a customer. Then we have internal market, where your own staff also should act as your customer. Correct? Then we have recruitment market. I need good relationship with the recruitment so that I'll get the potentially good employees. Without them, I can't manufacture a good product. I can't provide a good quality service. Correct? Then influence market means we have seen Instagram influencers. Correct? They will influence our product through advertising. Of course, we have to pay them money. Then we have customer market. Once our customer is satisfied, he himself will act as what? Reference. He will refer. And then we have referral market as well. Here we will refer it officially. We'll give them some money that if you refer, then so much money will pay you, right? Just like how apps are doing. Whereas in customer market, it will happen unofficially. Customer out of his own interest he'll do without any monetary compensation. Got the point? Yes, everybody. All right. Then we have seen use of IT. Of course, in use of IT, how will you maintain your relationship with the customer? You will send him what? Mails. Also, you'll try to give him some links. You try to sell your product through what? E-business, and also monitoring your customer transactions, which we have seen daily in our social media. Correct? And then Amazon is also doing the same thing. Nah? Once you search something in Amazon, you know what's going to happen. It will really bombard you with what? Advertisement, isn't it? Buy this, buy this, buy this, buy this. Just like in that movie, Junior NTR movie is there. Andhrawala. In that one old lady will be there. She'll be always behind Brahmanandam. You remember that? I actually get the same feeling. The moment I try to search something, then you open Insta, you open anything, then there'll be, Babu, please buy. Babu, please buy. Babu, please buy, like that. You'll be bombarded with ads, isn't it? Yes or what? All right, obviously. Right, then brand strategy. I think I gave you example for this brand strategy as well. For example, the moment we think about orange, immediately what comes to our mind? KTM bikes. The moment we think about green, what comes to our mind? Kawasaki, isn't it? We have seen all those examples, right? So use of logo or specific color or any other means to make the product distinctively visible. Just goes with Apple as well. Their logo, isn't it? And I told you the example of Apple stickers. How once upon a time, what was the intention behind Apple stickers? How they were taking on IBM once upon a time and all those things, isn't it? Yes? Right. After that, what did we see, Nana? customer relationship management. This is very, very, very important. What is this customer relationship management? Knowing the needs of the customer and providing best possible solution based on the personal information. Very core thing here. You will understand the personal information of the customer, his purchase history, as well as his buying preferences. Because we know that a satisfied customer will bring in more customers, and a dissatisfied customer will take away a lot of customers from you. That we know, correct? Okay, in that we have divided them into so many subparts. First part is analyzing a customer and their behavior. Second part is customer account profitability, which can also be called as customer profitability analysis, which we'll see in SAOA chapter, correct? Third one is customer lifetime value. Fourth one is what? Selecting a customer, acquiring him, retaining him, and then extending him, correct? All right. Now, what is the first one? Analysis of customer and their behavior. Means what? You got to understand the customer and his buying characteristics based on a lot of things. One is his geographical location. I gave you the example of Uttarakhand versus us, correct? Then purchasing characteristics. What is purchasing characteristics? What is his nature? Will he wait if there is a waiting time, or would he like to enjoy the car or bike immediately? What's his purchasing characteristics? How many years once he will change the car, he will change the bike? Everything will be studied. You understand the point? Then expectation of benefits, which is quality, discount, it depends. That's the reason people buy in December. I told you that example as well, isn't it? Especially when it comes to cars. And safety need, I gave you the perfect example of what? Tata and Mahindra, that too nowadays. And that too all the other cars also, they are improving their safety because the perception of, what is that? Yeah, people have got changed, isn't it? And of course, social need. I gave you the example of Toyota Innova and one of my friend, real estate friend, why he specifically bought what? Toyota Innova. Because there is a social purpose in the society, the way they look at Innova, isn't it? Did I tell you that example? Exactly, all right? Next, moving on to the next one, customer account profitability. So I told you that when you open your internet banking of your banks, you'll find a area called offers where you'll have pre-approved loans and all that. I told you the reason behind that, how these things will work, isn't it? For that, what did I tell you? Exactly, they will try to analyze each and every customer. They'll try to analyze what is the revenue they earn from that particular customer minus what is the cost that they've incurred to give that sort of a service to that particular customer. And finally, they'll divide the customers into 4 categories, which we call it as what? Platinum, gold, iron and lead, correct? And platinum customers are the most profitable customers. Gold are profitable. Iron is not profitable but desirable. But the last one is not profitable, not desirable, correct? Yes or what? And of course, to calculate this customer account profitability, you need the information based on activity based costing. That also we have seen. And of course, we'll be solving problems based on this concept in which chapter? SAOA chapter. Another concept name called customer profitability analysis. Right now, we'll not be doing all those things. We just try to understand. So, as I told you, think from bank's perspective, because bank is the example that we have taken. Okay. So what will happen, Anna? Bank will analyze the customer, all the customers, and it will split the customers into segments. And then it will calculate the annual revenue that you earn from every customer. Then it will calculate the annual cost of serving the customer. Then revenue minus cost will give it an idea of who is the most profitable customer and who is the least profitable customer. And eventually it will eliminate the unprofitable segments of customers. Correct? And then we have seen an example over here, how if a bank wants to give credit cards, okay, how they will try to divide the customers into these categories. And mostly for platinum and gold customers only, you will receive calls from banks saying that the credit card is for lifetime free, that, this, and all those things. You understand the point? Hello, everybody. And this is also a kind of a strategy only. That is the reason only offers will be there on credit cards more than debit cards. Have you ever observed? Because you want to make people buy with the money they don't own actually. Even today, I don't have any credit cards because I don't like buying things which is not my money, you understand the point? And also I'm very bad at remembering the due dates. So in credit card, you'll know what will happen if you don't remember your due dates, isn't it? You'll be like fined like anything, isn't it? Chalo, anyways. Now moving on to next one. What is the next one you've got? Customer lifetime value. For this also I gave an example, engineering college. And in that surrounding engineering college, if you have a multiplex, and I know that this guy will be studying in this engineering college for 4 years, and he'll be regularly coming to my multiplex for theater, he'll be buying snacks and all that, then I will calculate the customer lifetime value, correct? Which is nothing but present value of future cash flows of from this particular customer for a period of how many years? In this example, 4 years. So Customer lifetime value is nothing but net present value that a company desires from a customer over an entire lifetime. So here you have to take a judgment with regard to the duration of the relationship. In our example, what was the duration? 4 years. By considering customer loyalty, estimated frequency of purchase, which means how many times he'll come, and is there any comp data that we are going to get? Say for example, another mall can come, correct, in the nearby place. Exactly, right. Moving on to the last one. What is the last one, Anna? Selecting a customer. How to select a customer? I told you, BMW selects their customer in a different way. Maruti selects their customer in a different way, isn't it? Similarly, if you want to have a veterinary clinic set up, then you select your customer in a different way. You generally open the clinic in a rich area. I told you all those examples, correct? You remember that? And then you want to acquire the customer. We'll go for search engine optimization as well as what? Advertising. That also I've told you, right? And then you have to retain your customers. Correct? How will you retain your customers? Give them quality product, give them quality service. Automatically they'll be retained. And of course, finally, once you have retained your customer, you have to what? Resell him, cross-sell him, upsell him. What do you mean by reselling? Say for example, it's a mobile phone. After 1 year, he's going to change the mobile phone. What he will do? He'll give you the old phone and then he'll take the new phone. That is reselling. Suppose he wants to upgrade the mobile phone, then I'll take the old phone and then I'll sell him a costlier one. That is upselling. Or if I take the mobile phone and then I'll try to give him what? Accessories along with the mobile phone. You understand the point? Sir, this Bluetooth speaker is good, or this earphones is good, or AirPods or something like that along with the mobile. We call it as cross-selling. Got the point? Chala, fantastic. And finally, we have the last concept. What is the last concept, Nana? Gain sharing arrangement. I told you, I gave you that movie example. You remember that? So gain sharing arrangement means, let's say there is a hospital, and hospital gets lots of patients and they need to do a lot of diagnostic work like CT scans, a lot of scans and blood tests, that test, this test and all that. They don't have the equipment with them, nor they have the machines. So they have two choices. Either they can buy all this and they can recruit the doctors for this and then everything do it themselves. Or there is another guy like say for example Vijaya Diagnostics who can do all the job for you. He is the supplier. Okay. So in this case what will happen? That diagnostics guy, the Vijaya Diagnostics, he will take the first step. He will come to the hospital. He will say that, say instead of you buying everything on your own, which is going to cost you so much, and then you have to recruit the doctors, which will cost you so much, and then you have to pay them salaries, and they will do only this level of service when compared to us who are already what? Experts. Instead of that, if you can, refer all your patients to us, where we will be doing their diagnostics, scans, etc., etc., then this much is the profit that we can earn based on the difference between the fee that you collect and the cost that we incur. Okay. And this profit we can, share in this ratio like 60-40 or 50-50, whatever it is. Are you able to understand? And also the supplier here in this case, Vijaya Diagnostics, says that in case we are not going to get any profit, then you need not pay me any single rupee. So without any guarantee of payment, I'll start providing my service. Correct? That we call it as what, Nana? Gain sharing arrangement. Because in this example, they're sharing the gain. Correct? Yes or what? Right. So supplier performs his side of the contract with no guarantee of receiving what, Nana? Payment, and payment will be based on the benefit to the customers. So basically, who is the customer here in my example? Hospital. Hospital is the customer. You understand the point? Hello? Yes. So basically from this arrangement, either the supplier can be rewarded with large return or can walk away with nothing. So GSA seems to be win-win situation for both supplier as well as customer since interest of both the parties are aligned. In my example, that was the case. Correct? Another angle of GSA arrangement is that you need to take a lot of precautions when you are entering into GSA agreement. What are the precautions? First one, you be specific and both the parties need to transfer the data honestly. Are you able to understand? Only then both the parties will know exactly how much profit or is it getting earned so that they will be distributing that in a good way. Correct? If you are not honest with the other guy, if you are not transparent, then what will happen? Maybe the other guy feels that you are showing a wrong data, then the whole agreement will not work. Correct? Next, predefined formula for sharing of benefits. That is also very important so that tomorrow there is no confusion after the GSA has been implemented. Efforts from both entities are required, not just the supplier. Supplier will only agree for no guarantee of payment. That's all. That's the good thing that he's doing from his side. That doesn't mean that only supplier has to work. Even the hospital also has to work in this case. Correct? Yes. And finally, poor drafting of clauses or inaccurate GSA formula can lead to failure of GSA because it will lead to conflict. Once there is a conflict, naturally GST agreement will be what? What? It will collapse. As simple as that. Got it? Chalo, that's it. So with this, we are done with the revision of what? Very quick revision of what? Modern business environment. Now you guys can take a break. Okay? Chalo. After that, we'll start solving sums.